How do you see the market continuing through the summer? Are we in the middle of a strong and well-established bull market, or is it something a little more vulnerable than that?
Well, markets are about to close out their fifth week in a row of positive returns, and that's for two reasons: first quarter earnings and inflation data. So first, let's go to earnings, which NVIDIA is basically wrapping up our earnings seasons with a very strong quarter. But overall, earnings have been strong for the first quarter. Over 80% of companies beat consensus. Second is inflationary data that has mellowed out a bit. We started this year with a reacceleration of inflation, but recently CPI and PPI data came in at expectations, which was positive for the markets. Now let's look at the other side of this. What do we need to be worried about here? Two things: the Fed and manufacturing data. I'll start with manufacturing data. That's in the good news is bad news camp. The economy remains strong. That's inflationary. And the Fed remains hawkish. I expect maybe 1 to 2 rate cuts this year. This is down from the 7 that the markets expected at the beginning of this year.
So, Tim, I often wonder, Sarah just mentioned, that 80% of companies have beaten the forecasts. I wonder, the consensus. I wonder if that's because the consensus is bad or the earnings are good.
Well, we're worried about this concentration in EPS, but I think it's a function also of where you are seeing at least momentum in some of the broadening of the overall market. So you think about industrials, you think about what we're hearing in terms of the margin profile of a lot of companies. I would say especially as you get into transports and some of even the banks. I know we were disappointed about net interest income from some of the bigger banks, but we're also seeing other parts of the business, the cost savings. I realize the year of efficiency was something Meta coined, but other companies are doing it too. I will say, we're probably halfway to our 10% earnings growth in 24. And so we still have a ways to go. Street's calling for 10% EPS growth. And I think that's, obviously, that's something that's still possibly in question.
Sarah, I wonder if I sort of take your point about we've been on a decent run for the markets, but was this more of an inflection point this week where however things exactly shake out on the close here, people are starting to wonder, okay, well, NVIDIA beat, but that wasn't enough to lift the markets. The rate stuff, the Fed stuff, the hikes that could still be coming. Is it still all Goldilocks?
Well, this market, as Tyler mentioned, has been very much driven by a handful of tech stocks. All of the earnings are coming from those tech stocks. So the question is, can we broaden out from here? I think if inflation starts to settle, there's a chance that the market starts to broaden out. Our coin toss will probably be decided somewhat next Friday when we get PCE data. I expect it to come in line, so that's going to be good news. I'm going to be focusing on portfolio management. I think that will be kind of hot because the markets have rallied. Also, healthcare, autos, and airfare are going to be important in that data. If inflation starts to move toward the Fed's target, I think the markets can hold on as long as the economy remains strong. But of course, then we have to question, if the economy starts to slow, what kind of landing do we get? Do we finally get into that recession? I think these higher interest rates and inflationary data eventually will lead the markets into the economy into some form of a recession, but maybe not till later this year or early 2025.
How concerning is it, Tim, that so much of the earnings power has been concentrated in 5 or 7 stocks?
It doesn't bother me. And
why
certainly,
not?
Well, because first of all, the leadership in the market has come from the semiconductors. They continue to lead. Yesterday, certainly after that NVIDIA print, you've got semiconductors making relative highs to the S&P. This is where we're getting growth. We're seeing a CapEx cycle. We've talked about it. To me, it's almost reaffirmation of why I think some of this is incredibly bullish. I think we also just have to remember where markets have come from. I mean, we're up 8% since the April 19th lows, and we're up 30% from the October lows. So we've been in an extraordinary run. The VIX is at 4.5-year lows. I mean, you can make an argument that there's some complacency out there. You could make an argument that people are expecting too much out of the top 5 to 7 stocks in the market. But if anything, I think we've heard a story from the broader corporate dynamic around margins that's pretty good. Markets have had a big run. The fact that we got stronger.
They had a big run in 2023. They were good. It was a good year.
Look, complacency is alive and well. Don't get me wrong. And I think that's something people need to think about. The Fed is always lurking, although, again, the Fed scared people with some stale minutes this week on Wednesday. Rates are moving higher. And if you look at that, you could go all the way back to July of 2020. You could also say that, hey, even since the beginning of the year, that the bottom end of that up range is traded higher. JGB yields, I think, are pulling up U.S. rates. There are reasons for equities to be concerned, but it's to me, it's not the EPS profile of this last earnings season.
It's interesting to see.
I might add in.
Go ahead, Sarah. I was just going to add
to what.
To
what Tim said. What should the narrow market be concerning? I'm a little bit more concerned because it's like if you're looking at a stock. Do you have one catalyst or do you have 10 catalysts? There's one main catalyst for this market. It's been tech earnings growth and AI. So if that catalyst does start to fall apart, which I don't think it imminently will, then you have zero catalyst. So I'd like to see more catalysts for the markets, broader strength across the board, more companies participating with their ability to sort of continue to grow and raise their forecasts and beat earnings going forward. That I think if we continue to have that, the stocks and the market will broaden out.
Great points. I'll just say, banks, Citibank's up 75% from October. We're seeing a lot of the industrials, the transports, not so much, but I think it's a time for the broader market.